Copyright in these lectures is either owned by the ANU or a third party who has licensed the ANU to use it. Students may use the recording for personal study only. No lecture may be communicated online, copied or shared without the prior permission of the ANU.
Okay, good afternoon, everyone. So I hope you enter into the right room. So this room is for 7031, which is Management Accounting and Cost Analysis. So welcome to the first lecture for this course. So for this lecture, I'm going to first give an introduction about myself and then talk about some of the things I want to highlight to you regarding, for example, how to do well in this course, what are the key things I would like to show you. And in the third part, we are going to discuss the key lecture notes I think you have already got right in front of you. So that's the plan for this week's lecture. So I'll just give you a brief introduction about myself. So as you can see here, my name is Alex Wang, and I did my bachelor and a PhD here in ANU. My office is 314 CBE building. I think the building number is 26C, and my consultation is from 11 a.m. to 1 p.m. every Wednesday. So if you have any questions regarding this course, please feel free to come to my consultation. Right? If you feel more comfortable, right, to send me emails, that's also okay. So this is my email. Right? And I think if you have long questions, it's better you come to my consultation to have face-to-face discussion, because sometimes right, emails may have some misunderstandings. But if you look for a quick answer, for a short question, then email I think is all good. And so these are my research interests, right? So basically, given that I'm teaching management accounting, my research interest is always in management accounting area. like the design and use of employee performance measures, targets, right? The design of KPI, key performance indicators within the companies, and how to manage the relationship in a partnership, right? Collaboration between companies, something like that. So here are my research projects here, and these are the companies that I have been doing research with. So if some of you are interested in doing research, or want to know more about what's management accounting and what's the role of management accounting in the organization in real life, yeah, feel free to talk to me. I'm always happy to share with you on those. And also, please feel free to come to me and then tell me about you, right? Either during the break or after the class. Yeah, so hopefully we can have a very nice and enjoyable semester. Yeah, so that's roughly about me. So next is I want to show you some of the key things, right? Key information on Wordle. So as you can see, Wordle is very important, right? Sometimes, if I want to, let you guys know some message, right? I will always put those notice on Wordle, right? So that's why I think it's better for you to keep your eyes on Wordle, in case any, changes, notice I put up on it. And on Wordle, you can see, all the course announcements. If you haven't enrolled your tutorial, you can do it here. But someone just told me all the tutorials are full, right? So we are still waiting for the final enrollment numbers to be finalized. And after that is confirmed, then we may open a new tutorial, right? Otherwise, let me know. Send me an email. I can manually enroll you in one of these tutorials. So next one, I forgot to do the lecture recordings. It's important. So you can always refer to the lecture recordings, right? If you want to recapture what has been taught in the class after the lecture, of course. Now it's open. Yeah, as I said, Wordle is very important. So if you open Wordle, so there's a file you can, how can I get it back? Yeah, there's a file you can, look at, which is the class summary, right, final version. So click on that, then you can see the basic structure and key information about this course. So as you know, the name of the course, Management Accounting and Cost Analysis, right? And here's a textbook, right, you need. It's Horrigan, the 3rd edition. So I brought one copy here. It's this one, with orange cover. So pay attention, it's 3rd edition, right? Some of the previous students may try to sell you, the 2nd edition, which is a previous one, with blue cover. So that one, I think the key materials are the same. I mean, contents are the same, but they do have some significant changes being made, right, in this new edition, like the questions after following each chapter's material. So it's still up to you, right? But I think the new one is better. The 3rd edition is better. And if you still don't want to buy a textbook, I think you can borrow a book from Chiefly Library. But it can only be on loan, so which means you can only read the book in the library for 2 or 3 hours, I guess. But you can't take them back home, right? So that's it's up to you, right, whether you want to get a textbook or not. I think if you decide to get the textbook, you should also be given an e-copy of the textbook where you can read the textbook on your laptop or computer. So that's the textbook. And I think the next thing is, I think you guys must be very keen to know, right, what are going to be taught in this course through the semester. So these are the 12 topics, right, we are going to discuss and teach in each week, right? So it's too long. So you can read yourself, but here are the topics. And this is the, so it's worth mentioning that in week 6, you are going to have a midterm exam, so which means you won't have a lecture or tutorial in that week. Just to let you guys focus on the midterm exam. And the final exam will be sometime after week 12. So as you can see that, in week 4, 8, and 12, right? You are going to have 3 quizzes. So the quiz is not a hard copy quiz, but you have to do the quiz on your laptop, right? But I will show you how it works. But keep in mind they are online quizzes. So these online quizzes in total was 10%, right? And midterm exam was 20%. And you are also going to have an assignment with groups, which is also 20%. And the final exam takes up 50% of your final grade. So that's the assessment structure of this course. And in terms of the online tutorial quizzes, as I said, they are going to be held in week 4, 8, and 12, right? Roughly 12 minutes for each quiz. And the quiz will be returned soon after each deadline. So after you complete the quiz, I think you should be able to see the results straight away. Right? And all the marks for the 3 quizzes will be taken into consideration for the whole 10% of the overall tutorial quiz mark in your overall assessment. Any questions on the online tutorial quiz? Am I explained clearly to you how it works and how much it works? Yeah. The second assessment, as I said, midterm exam, going to be held in week 6, covering material from week 1 to week 5 lectures, right, and the tutorials. The third assessment, team case study, right, is due on the 9th May 2019 with groups. And the assignment will be handed out to you or put up on Wordle in week 6 sometime. Final exam, it's a 3-hour examination, right, with 15 minutes time, 15 minutes reading time. You should be very familiar with this, right, similar to other courses. Just one more thing. For the assignment, I think you have to hand the hard copies to the school reception, so we don't do online assignment submission for this course. Just print a hard copy of the assignment and then submit it to the school office by the due time. So that's the materials, contains topics and assessment, right, structured into this course. And hopefully by the end of the semester, you guys will have equipped the following, right, outcomes. So first, right, don't think this course, although it's a university course, don't think it's too theoretical, right? Actually, we build this course into practice, right? Sometimes we borrow, sometimes as you will notice, I will explain to you what's happening in the real world, right? With those theoretical knowledge being taught. So therefore, by the end of the semester, I hope you guys can critically analyze, provide recommendations, right, to improve the operation of organizations, right? So management accounting is very important for the daily, the everyday and the strategic management of organizations. So hopefully by the end of the semester, after you learn some management accounting tools and knowledge, you can use them, right, to help organizations to do some analysis and improve their, financial position. Second, I want you guys to demonstrate the mastery of costing systems, right? So one key part of the management accounting is cost accounting, right? And so therefore, by the end of the semester, I also want you guys to know how to, estimate the cost, right, of a particular product or cost object, right? What are the ways? What are different ways we can do that, right? So on and so forth. And also budgeting system, performance measurement system, right? I also want you guys to have, to gain an understanding on that, right? And I hopefully can use them. So demonstrate the need for a balance between financial and non-financial information. So don't think accounting is just about numbers, right? Recording, numbers, doing the debit credits. So it has a more broad application, right? How to use accounting information, say for example, help organization achieve its strategies, right? And how to use accounting information to influence people's behavior, right? With the lowest cost. So those are all the things, all the topics, right, that can be part of the management accounting. So yeah, just think broad, and then yeah. So fourth, evaluate the cost and the benefits of different conventional and contemporary costing system. So often, these days we have too many things, right? Too many things going on. So similar for management accounting, we may have, competing, more than one system that can be used. Which one should we use? Right? How can we make a choice? And what are the rationale that we use to make that a choice? So I want you guys to know how to do that. Right? We need to make a choice. Right? We can't do everything. Right? So doing everything is impossible anyway. So fifth, learn independently and to demonstrate a high level of personal autonomy and accountability. Right? So after all, it's your own study. Right? So you have to take all the responsibility for your study, right? For your final grades. So if you work hard, then right, likely you are going to have good results. Right? If not, obviously, right, it's difficult to get good marks. So, and learn within teams. As I said, you are going to have a team case study. So learn how to work within team, how to help each other, right? Get over difficulties. So that's very important skills, right? Not only for your university study, but also for your later career. Evaluate the complex ideas, tolerate ambiguity in managerial and organizational problem solving, right? So even if today we have many advanced management accounting techniques, right, to help organizations daily operations, it's inevitable that we always encounter some problems, right? Learning how to identify those problems and solve those problems is also important. So these are the 7 learning outcomes I want you guys to achieve, right, by the end of the semester. Yeah, so that's my expectations. And regarding how to do well in this course, sometimes, right, in previous semesters, students come to me and asking, how can I get an HD for this course? Well, I reply, just keep on working hard, right? Practice makes skills. Right? Genius cannot get a good results without hard working. So I want you guys to enjoy the course, right? Research suggests that people say that if you like doing something, you have the intrinsic motivation to do things, to do a particular thing, you often do that well, right? Because you don't feel exhausted, you don't feel tired, you don't feel bored. Right, so you try to enjoy this course, right? Like the ideas, like the costing system, like asking questions, and then you will be motivated, hopefully. And then next, come to lectures and the tutorials, right? Because sometimes some of you may prefer listening to the videos, at home, right? That's fine, but I think it's also good to come to the lectures, right? Because social interactions cannot be replaced in any ways, right? And sometimes, we draw, in the lectures or tutorials, we draw the pictures, draw the working solutions on the whiteboard, which might not be same if you stay at home and simply watching the videos. And more importantly, attempt to do the tutorial questions, lecture problems, self-study questions after home before you come to lectures and tutorial, right? Because sometimes, if you don't do them at home in advance, then you may not be able to follow what we are talking about in the lecture tutorial, right? Because some of the concepts might be very hard. And the third thing, timely review materials you learned in previous week. So some of you may have the practice, may have the behavior, may have the habit of doing the course review, right, until 1 week or 2 weeks before the exam. But I reckon you guys to do a timely review for your materials, right? So after each week, after you finish each week's lecture tutorial, try to summarize the materials you learned for that week, right? But don't do a very complex review. Just write the key concepts that you can recall, and then write them down on a piece of paper, and then try to draw the links between different concepts. So that may help you, right, when the exam comes. So treat assignments seriously, right? I think there's no need for me to mention that anymore. You are the second year student, so. And finally, strategies for taking exams. So I will mention this to you later on when in due course, because sometimes using a particular tactic or strategy will help, right, for exams. Anyway, so that's how that's some of the experience, right, or tips I have for you guys for how to do well in this course. Just one final thing before we look at the lecture materials. So I mentioned the online quiz, right? So on Wordle, you will see a link there, right? So this one. So if you go to Wordle, you can see there's a section about Pearson My Lab, right? So that's where you can find the online quiz. So if you click Pearson My Lab Accounting All Assignments, so by doing that will lead you to the quiz you are going to take, right? But before you do that, I think you have to agree the privacy notice and consent, right? So I think I already agreed. Yeah, so no, it still shows up here. So just select yes, otherwise you won't be able to log into Wordle and then look at the quiz, and then finish attempt, right? And then you should be able to see the quiz. However, to make sure that you guys have a good understanding on how the online quiz works, so I will open a trial quiz next week. So, yeah, it's here. Yeah. So as I said, next week, I think the next Friday, is it? Let me double check. Yeah, next Friday is 8th of March. So from 3 p.m., 8th March, which is next Friday, right? You should be able to see the trial quiz on Wordle, right? By clicking the My Lab Accounting link. And the quiz will be open for 24 hours from 3 p.m. next Friday, right, up to 3 p.m. Saturday, right, the next day, on the 9th of March. So pay attention, please pay attention that you can only do the trial quiz during that time slot. Otherwise, you won't see the quiz. Right? So please do that. And then the first trial quiz will not be counted for any marks, right, as part of your final grade. Just want you guys, because I just want you guys to be familiar with how the online quiz works, right? Getting to know how it works before we, formally start the quiz. So the formal quiz that will be counted in your assessment, in your final grade, will be, right? You can see, you can record the course summary, right? The first formal online quiz will be on the 22nd of March. Again, it will only open for 24 hours from 3 p.m. right, Friday, the 22nd of March to 3 p.m., right, 23rd March, the following day, right? So which means you can only do the online quiz during that time slot, right, for your first formal quiz. Otherwise, you won't be able to do the quiz. And then your mark for that quiz will be counted as 0. Okay, is that clear for you, online quiz, how it works? Yeah. But anyway, if you have any questions, feel free to send me an email. I'm happy to talk more with you on that. Yeah, so that's pretty much what the introduction I want to give to you. Right? Any questions before we look at this week's lecture material? Any questions? So just let you guys know that I'm happy to be interrupted, right? So if you have any questions during the lecture, throughout the semester, feel free to raise it. I'm happy to stop and then, try to help you solve that problem. Right? Okay, if no other questions, let's proceed to the content, right, of this week's lecture. So, so this course is management accounting and cost analysis, right? So this week we are going to focus on chapter 1 and chapter 2. In fact, for chapter 2, you only need to read the materials from page 37 to 56. So you don't need to read the whole chapter, right? So for this week's lecture material, I would like to, so the key message are to give you an introduction about management accounting, right? Including the definition, including the definition of management accounting, the role of management accounting, and management control system within organizations, and then the environment in which management accounting are fit in today's in today's operation. And following part A, I'm going to introduce some basic management accounting concepts to you, right? Including cost terms and how we can group different types of costs into certain categories, and how the cost may flow as the manufacturing process goes. And finally, the management control system design. Right? So that's what you are going to learn in this week's lecture. So let's start from the very beginning. I think you all of you have learned 7008, which is financial accounting, right? Can you still recall what financial accounting is about? So what are the purpose of doing the financial statements? For example, income statement and a balance sheet. So why we are doing that? Can you still remember? Remember in that course you need to do the debits, credits, record the transaction in journal entries, and then transfer them to the income statement, balance sheet. Right? Why we are doing that? Because it's required by law, right? Especially for public listed companies, right? They have to prepare income statements. For regulators, like taxation office, right? In Australia, every company has to prepare financial statements and then lodge them into Australian taxation office, right? So that ATO can check whether the tax you paid is correct or not, right? And according to some of the Australian accounting standards, right, public listed company here in Australia must also provide financial statements, right? And the financial statements can also be used for potential investors, right? Because without the financial statements, how investors can know how your company performed in the past years, right? So that they are unable to make the decisions, right? So that's why if the accounting information is prepared for external reporting purpose, then we call them financial accounting information. Right? So that's what you learned in 7008. So for this course, management accounting, right, in opposite, is prepared primarily for internal use. Right? So internal means managers, the people, or parties within the company, like managers, right, CFOs, CEOs, employees of the company, right? They are the people within a certain organization. So management accounting information is prepared for those people. So why those people needed this information? Because, right, they want to, maintain the business, right? They want to do better in the future. So without such accounting information, how can they know, right, the weakness of the company and the potential area where they can improve in the future, right? So that's all management accounting information is about, right? Providing useful information for internal users, right, for better managing the organization. So I think this table perfectly summarizes the difference between financial and management accounting, right? So for managerial accounting, it helps manager make decisions, right? So where we should invest in next year, right? Do we need more staff, right? Do we need to, is it a good idea to open a more branch? If yes, do we have enough capacity, right? Do we have enough resources to do that, right? So that's all the information that can help managers, right, make that decision. So that's why internal managers are the primary users of management accounting information. And given that management accounting information is used for the future, so therefore those information should be future oriented. Again, which is different to the financial accounting information. Right? Remember, in 7008, you must know that financial accounting information summarizes the past financial position, financial performance of the company. Right? It's all about the past. Right? But management accounting information should have a future orientation. And given that each company is unique, right? ANU is different to University of Sydney. Is the way the organization is running, is managed, right? It's doing marketing. It's different to that of UNSW, University of Sydney. So therefore, there's no unique rule or standard rule that all the organizations need to follow. Right? So actually, that's why some of the organizations, right, they perform very well because they have very good management, accounting, and control systems, but others are not. So therefore, that difference, how well the company uses management, accounting, and control system makes that difference. But the point here is that different to financial accounting, there's no particular rule, right? Companies need to follow when they prepare the management accounting information. And given that management accounting information needs detailed, right, cost information, so that's why it can be very current. The information can be very current, right, up to a long period of time. So which is, again, different to financial accounting. Remember, the income statements is prepared annually, right, but sometimes quarterly. So therefore, the financial accounting information usually covers for a certain period of time, right, which is different to management accounting. So that's a key difference between managerial and the financial accounting, right? So if you have, if now you have a big understanding, a rough understanding about the difference between managerial and financial accounting, then next we can talk more details about management accounting. What's management accounting? Right, so management accounting is often seen as the processes and the techniques used to enable efficient and effective use, right, of organizational resources, right, to support managers in their tasks of enhancing both customer value and shareholder value. As you can see here, there are three key concepts in the definition of management accounting. The first one, resources. So when we are talking about resources, it's not just about money, right, cash, but also the human capital, right? The talents, the good employees within the company, right? And also some non-financial information. Like McDonald's, it has big name. Do you know that the big name is actually an intangible asset the company owns, right? So that's also part of the resource of the company, right? When we talk about, when someone told you, KFC, you immediately know that which company it is, right? It's also the resource, right? The value of the company. So, and we use the resources to what? Right? We use the resources. We need to, have a focus. We need to have an aim. So the aim here is to enhance shareholder value. Remember, who are the owners of the company? Managers, CEOs? Probably not, right? CEOs, managers, they are only the agents for the owner or shareholder of the company, right? On their behalf to manage the business, right? Especially for very big companies, the owners are different to agents, right? To managers, CFOs. So we use, as managers, we have to utilize the resources we have within the company, right, to increase shareholder value. So in a simple way, it means that, as managers, we have to use those resources, try to create value, right, make money, right, make returns for our bosses. So that's the idea, right? So if shareholders, if the owners of the business, they can't make returns, they can't make money, So why they need to, why they keep on, investing in the company, right? So this is very important that, in the end, we have to create shareholder value, increase their value, increase their returns. But then the next question is how to do that, how to achieve that. Right? Eventually, right, we open a business, we operate a company for sales, right? For sell either services or, finished products. So therefore, in order to make the sales, we have to focus, 100% on our customers, right? Making our customer happy, make or design the products that are valued by our customers. Eventually, we want to, make sure the products, the service we make can bring customers to us, right? So that we can make money and then, make our shareholder happy. Right? So that's the idea. So that's how, management accounting is used for these purposes. For these purposes, you are using resource to increase shareholder and customer value. Right? But sometimes, you have to pay attention that management accounting is different to cost accounting. They are related, but different. So cost accounting is a process that involves measuring, analyzing, and reporting information relating to the cost of acquiring and using of resources of the organization. So in other words, cost accounting is mainly about the cost, right? So how cost occurred, right? And through those costs, what are returns the company gain, right? So these are the, those are what the cost accounting focus. So another example is how to, estimate the cost of making a particular product, right? Cost accounting, primarily focus on numbers. But as I said at the very beginning, management accounting, right, is more than numbers, right? So in other words, the concept of management accounting is broader than cost accounting. Right? And, one example is, so one function of one purpose or one use of management accounting is to use, those cost accounting information, right, to design a system or to use those accounting information in a way to influence employees' behavior so that they can act on behalf or at the interest of the organization. Right? One good example is KPI, key performance indicator. Right? So if you have experience working in a bank, in a hospital, you know that typically they have a key performance indicator. Right? In the end, right, the employee, a particular, say for example, loan officer, loan manager's, total compensation bonus, right, is largely determined by their KPI. Right? If they can achieve their preset targets, then they get rewarded. If not, their basic salary may be reduced, right? Something like that. So the point is here, management accounting is more than cost accounting. Right? They are different. So this diagram shows where management accountants, the role of management accountants in the organization. So when the top management make set up the organizational objective and then formulate a strategy, right? Made a strategy to achieve those objectives. Then management accountants can use management accounting tools to plan for to make a plan for how to achieve those objectives and strategies, right? And then help them implement the strategy and plan. And in addition, management accountants at the end of the year, right, or at the end of a certain period, right, they can again use management accounting system, management control system, right, to evaluate the performance of the company for that particular period, to see whether the strategy is end up with good results or not, right? So basically, planning, implementing, and controlling. So this is where management accountants play key roles in organizations' strategic decisions, everyday operations. So I will show you some key examples, typical examples where management accountants or management accounting can help in the organization's daily operations. So planning, remember, for organization, it's very important for plan its future operations, right? So how management accounting can help? By preparing the budgets. I think you heard, if you listen to the ABC News, every day you often hear from the government that, oh, we have the budget for this year, how many billion, right? But what's budget? You often hear these words, but what's budget? So budget is, at the end of a particular year, the company or the organization always need to prepare, expected sales revenue and the cost, right, for next year. So why do they need that? Because they need to make a decision on how much money, how much resources we need to allocate to different departments, right? Otherwise, the company will be a mess in its next year's operation. So we have to plan for the future, right? So that's what budget is. That's the function of budgets, right? Allow the top management of the company know, how much sales we are going to, the company is going to generate in next year, and what's the expected cost of doing that. And management accounting and management accountants can also help implementing the decision, right? So if we want to open a new business overseas, right, in US, in China, or in other countries, then, at the end of the year, we need to know all the transactions occur, right? So we need an accounting system, or these days we need IT software help us, recording all the transactions occurred through the year, right? Before we can summarize all the information and give a prediction or give analysis. So that's where management accounting can help the company implement decision, right? Recording the transactions. So in the end, at the end of the period, the company can also use performance reports to evaluate the company's past year's performance. So that's where management accounting can help organization evaluate and control its future performance. So these are the examples for the role of management accounting and management accountants in the organization's daily operation process. However, in these days, with the globalization across the world, there are increased competition among companies, right? Automotive industry and the high-tech industry, very intense competition. And one reason for that intense competition is, customer always, shift their focus, right? Once we have, in older days, we don't have smartphones, but nowadays we have smartphones. And our expectation on those type of products become higher and higher, right? So this, makes it hard for organizations, right, to continuously meet their customer decision, their customers' expectation, right? So therefore, today, in these days, management accounting need to satisfy customer needs, right? On the one hand, we have to keep on, improving ourselves, but at the same time, lowering down the cost as much as possible, right? If a company can do that, then the company has a good future in today's world. So, and in addition to that, we have to respond to our customers very quickly. Right? So I have experience of doing a research project with a company. It's a US company. So I think the US company initially, because they have the very good technology in the engines, so they occupy the whole market in 1990s. However, they gradually lose the market. And then they started to diagnose the problem. So they found the problem is they responded to their customers too slow. Right? You know that for the companies in Western countries, right, as long as before they make a decision, right, that decision has to be approved, right, by their supervisors, right, for several levels before that decision can be implemented, right? So that's why, whenever the company received a call, a customer complaint reporting an issue on their engines, it always takes 3 to 4 days for that problem to be fixed for their customers. However, for their local competitors, what they did is, as long as there's a problem on the engine reported, then the local competitor will replace the engine straight away for their customer, regardless what the problem it is, right? And later on, they start analyzing what's the problem. So in this way, I think it only took their competitors 1 or 2 days to fix the problem for their customers, right? So gradually, over years, customers, more and more customers go, leave the first company, and then so that's the reason they found, right? So the point here is that quickly respond to our customers is very important in these days, business environment. And finally, innovation, right? So that's a good example is Apple, right? In these days, more and more people don't like, decide to leave Apple, choose alternatives like Samsung, Huawei, whatever. Why? Because their innovation doesn't go very quickly, right? These days you buy an iPhone, not much different to the iPhone you bought 3 or 4 years ago, right? So that's not a good signal for the company. So we have to keep on innovating, improving ourselves on the products, right? So that's one important way of making the company survive in the intense competition in these days world. Okay, next is, as management accountants, how can we do that? How can we make sure these objectives can be achieved? So, there are some principles we can follow. Before we make a decision, we always do the benefit and cost analysis. So if we want to go for that option, so what are the costs of doing that? And with that cost, what are the benefits we will get? And then do the comparison between different options, and then before you make a decision. And as managers, you also need to consider whether the implementation, the use of a particular accounting system will affect your employees' emotions or not, right? Because employees are the milestone of the company. Without employees' support, then a company can hardly succeed, right? So therefore, always consider behavior and technical considerations. And whenever a cost occurred, always think about why there's a cost there. So what is the purpose of having the cost, right? That's having that a cost bring benefits to us, right? So that's always the three things management accountants need to think about before they make a decision. So that's why management accounting, as I said, it's not just about numbers. We also need to consider, other non-financial information, our staff's emotion, happiness in the workplace, right? Our relation with our, suppliers, partners. So all those information need to be considered and narrowed into the management accounting system. In addition to that, as management accountants, we have to consider, all the accounting information, not only in the production process, but also, across the whole value chain. Right? You know that when a company makes a product, right, it will start from the very beginning stage of research and development, right, followed by design products, before they can make the products. And even if after making the products, we also need to, do the marketing, and distribute the products and provide after-sale customer service. So in all these stages, the whole processes, right, management accountants can play a role there, right? Because I guess all the different stages involve cost, right? Analysis of the problems. So that's why management accounting, just bear in mind that management accounting play a role in all these processes. But the focus for this course will be on the production process. Okay, what time is it? Maybe let's have a quick break before we restart. Okay, let's restart. So in the first half of the lecture, we talked about the definition of management accounting, the role of management accounting and management accountants, right, within organizations, and the contemporary management accounting environment. So, so that is just those information just to give you a brief introduction, a flavor, right? Let you taste the flavor of management accounting, right, is about. But now we are going to go, in the second half of the lecture, we are going to more details, right, about the key management accounting concepts. So I think there are 5 1, 2, 3, 4. Yeah, there are 4 concepts listed here. So the first one is cost, right? So what's cost? So there are resources sacrificed to achieve specific objectives, right? So if let's talk about making a car, right? So the cost. So what are the costs of making a car? How about the cost of purchasing the steel, the material? Yeah. So because without those costs, right, it's impossible to make a car. Right? So therefore, the money sacrificed to purchase steel and all other materials for the purpose of making the car are the cost. Right? And the next one is the cost object. Have a guess in the example of making cars I just mentioned to you. What are the cost objects? What's the cost object of that? Yeah, the car. Right? So basically, anything where we want to estimate the cost for is a cost object, right? So if we are talking about, making a car, and for a company, we want to know what's the total cost of making the car, of making that item, the car, right? So that item is known as cost object, right? But a cost object can be anything, right? For a service type of firm, the cost object could be each individual client, right? So how much cost we spend on that particular client. So why we want to identify the cost object and the cost? Because we want to know the cost first. Because we want to know the cost of providing a service or making a product first, before we can know how much we should price for them, right? So as companies, we don't want to see, we set a selling price for our products lower than its cost, right? It's not a profitable business, right? We need to make sure the cost can be covered, right, by selling those products. So in order to estimate the cost for a particular cost object, we need to assign cost, right? So cost assignments refers to the procedures used to identify and trace or allocate cost to cost objects, right? So again, using the same example of making cars, right? Multiple departments within the organization may get involved, right? The procure department, for example, right, need to purchase, the materials for all the cars, right? That is being made by the company, right? So for a car manufacturing company, typically we have a procurement department. So this department, has the responsibility of purchasing all the materials, like steels or rubber, for all the models of cars, right? But eventually, at the end of the day, we want to know the cost of making each model of car. So for BMW 3 Series, 4 Series, 5th Series, or X Series, right? In order to know the cost of making each car, right, falling into each of these models, we want to, right, determining among the total material cost incurred in the procurement department, how much of them should be assigned to the 3 Series model, 4th Series model, 5th, and X Series. So this process is called cost assignment, right? Among the total of a certain type of cost, how much of them should be, assigned, right, to each type of models we are making. So that process is called a cost assignment. But sometimes costs are accumulated. Another good example is just now we talked about materials, right? But another type of cost that might be, used or incurred in the manufacturing process is electricity expense or the, water cost. However, we may not be able to, know the total cost, right, every day for electricity expense, because you know that when you rent a home, rent a house, rent a room, right? You want to get the electricity bills until 3 months, the end of the following 3 months, right? So in other words, the electricity expense will be accumulated, right, for 3 months' time before, right, they can be allocated to each of these different types of models, right, different to materials, right? Once you purchase materials, you can, make a decision, right? How many materials we should send to this department, to this production line, right? So that they can record them immediately. They don't need to be accumulated. But for electricity expense, water expense, right, or other utility expenses, then they will be accumulated, right, before they can be allocated. So that's called cost accumulation. So once you know these basic concepts, then we can, go to next level, which is cost groupings, right? So for ease of managing different types of cost for the company, right? Normally, right, different types of cost can be categorized into different types. So there are two ways in management accounting for classifying or categorizing different types of cost. First, we can separate all the cost into two types: direct cost and indirect cost. Right? So direct cost is the cost that can be easily traced and economically traced to a given cost object. Right? So again, in the car manufacturing example, can anyone tell me what cost is direct cost? So look at this picture. What cost in this picture you think is a direct cost? Yeah, material, right? Like the steel or the rubber for the wheels. So why you think it's direct cost? Because we know exactly, right, how much rubber, how much steel we should use for making a car, right? Someone may ask, how can we know that? For example, for the material, total material needed for making a car, we just put the car, right? After we're making the first car, we just put the car on a scale and then weigh it, right? We know how many, right, steel we need for that. And then we can, know how much steel we need for the second car, right? Provided the second car is the same as the first car we are making. So yes, you are right. Steel, rubber, they are the material cost in general are direct cost. And how about indirect cost? So indirect cost are those that cannot be easily or economically traced to the cost object. Again, look at this picture. What do you think? Which cost is indirect cost? Yeah, electricity expense, right? The cost of lighting here, cost of lights. Why? Do you think, so remember when you receive the electricity bill for your room or for your house, for your rented house, right? You only receive one bill, right? In the bill, it tells you the total electricity or water expense, right? So the same thing, maybe $1, $100, for example. The same thing occurred in a manufacturing plant. At the end of the 3 months, the company will receive electricity bill, saying, for example, the total electricity expense for your company, for your manufacturing plant is $1 million. But the problem is, can we know exactly how much among that $1 million is particularly used or occurred for making cars? Probably not, right? Because in the manufacturing plant, too many activities going on, right? Besides making cars, electricity expense can be used for, running the computers, right? For, employees to charge their mobile phones, right? For using one microwave to heat, their lunches, right? So on and so forth. So therefore, it's very difficult to know exactly how much electricity expense among the total figure that should be assigned to a particular, car. So when that happens, we call that a cost, indirect cost, overhead expense. But of course, later on, you will learn some of the management accounting techniques that can help us, to make that estimation, right? But again, it's very difficult and abstract to know the results. So that's why we call it indirect cost. Right? So that's the first way of group different types of cost. And the second way of doing that is where we separate all the costs into another two types, fixed and a variable. So as you can see from the name, fixed means the total amount of a certain type of cost will remain unchanged, regardless of changes in the related level of activity or volume. So in other words, no matter how many cars you make, if the total cost doesn't change, then we call that a cost, a fixed cost. So one good example is equipment for making cars, right? The cost of purchasing the equipment, right? So if, let's assume, right, the company is making 10 cars, and the company is making 100 cars. Under two scenarios, the cost of purchasing that particular equipment is always the same, right? Because the equipment, when purchased, right, the price, the money the company paid to the supplier is going to be fixed, right? So the cost of purchasing equipment, therefore, is a fixed cost. And the variable cost, right? Again, according to its name, so the total figure will change for this cost in proportion to changes in related level of activity or volume. So one good example is material, right? So the more cars you make, then the more steel you need. Obviously, the total cost, total number, and the cost of steel will change when the total number of cars you make changes, right? Increases. So therefore, that cost is a good example of variable cost. But when you're using this type of cost grouping method, you also need to pay attention or identify the relevant range, right? Because when we are talking about fixed and a variable cost, we always need to refer them to a particular relevant range, right? Within which the cost behavior for these two types of costs will not change. So I'll give you another example here. So let's assume the cost of equipment. So it cost the company $1 million, right, to purchase one machine tool or one piece of equipment. And the maximum capacity of the equipment is 100 cars. So which means the equipment will become obsolete or is not functioning, right, at all after the company make 100 cars. So the relevant range here refers to what? 100 cars. So within the production volume of 100 cars, the cost of purchasing equipment will not change. It's always the same, which is 1 million, right? However, if the company wants to make 200 cars or even 101 cars, which is beyond the maximum capacity of the equipment, then doesn't the company need a second equipment? Yeah, because the maximum capacity for the first equipment is only 100 cars. So when the production volume is 101 cars, then the company needs to purchase another equipment. So therefore, in this case, the total cost of purchasing equipment becomes how much? 2 million, right? So it changed from 1 million to 2 million, right? So that's why you always need to pay attention, right? When we are talking about fixed and variable cost, so what's the relevant range, right? We are talking about for those costs. So that's important. And if you add up fixed cost and a variable cost, it will give you total cost, right? Similar to the first grouping method, if we add up total direct and indirect cost, it will also give you the total cost. Right? But pay attention that when we are talking about fixed cost, although the total fixed cost will remain the same within relevant range, but sometimes in the question you will see fixed cost per unit, right? So instead of talking about total cost, sometimes companies, right, they need to convert fixed cost in total figure to fixed cost per unit, right? Per car, for example. Why? Because if we want to estimate the cost of making a car, of course we need to know the fixed cost per car, right? Otherwise, if we only have total cost, how can we estimate, right, the cost of making just one car, right? So if we are talking about the fixed cost per unit, then you can see that, this fixed cost per unit will decrease as the total number of units made increase. Right? So why is this case? This is because, remember we talked about that the total fixed cost will be the same, right? No matter how many units you make. So that's total fixed cost. And how can we get a fixed cost per unit? We need to divide the total fixed cost by the number of units made, right? So of course, if the numerator remains the same while you keep on increasing your denominator, of course, right, the fixed cost per unit you get will drop, right? So that's why if you look at this diagram, you will have a decreased fixed cost per unit, right? Because the same total fixed cost will spread on more units, by lowering down the fixed cost per unit. However, if you look at the variable cost, we know that the more units you make, the total variable cost will increase. Right? However, the variable cost per unit will remain the same. Right? If it takes, if it requires 500 kilograms of steel for making a car, for making the first car, then the same amount of material is still needed, right, for making the second car. So that's why the variable cost per unit will be the same, right, no matter how many units you make. So pay attention to that, right? So when you have the questions, we are talking to our managers, right? Be careful, right? What units you are talking about? You are talking about total cost or cost per unit. They are different. So that's why it's important to know, right, how costs behave and what type of cost we are talking about. So now let's look at a lecture problem 1.1. So just have a quick read for the question. By the way, the lecture problems are on Wordle for each week. So it's better to bring the lecture problems with you, right? So basically, we are talking about a home entertainment shop, right, in Sydney. And there are several different types of costs given, A, B, C, D, E, right? So basically, the question asks us to classify each of these costs into either direct or indirect, and the variable or fixed cost. So that's the question. And when you are dealing with this type of question, I think the first step is always to identify the cost object. So for which item we are talking about the cost, right? We are trying to assign the cost. So if you read the question, do you know that what's the cost object? It's here, right? The total number of videos sold. So that's the cost object, right? The video is a cost object where we are trying to estimate the cost for. So therefore, once you identify that, then we can look at each of these items. Electricity cost of the shop, what do you think? Is direct or indirect? Indirect, yeah, as we discussed, right? In the car manufacturing firm example. So it's indirect. It's fixed or variable? Fixed. Why do you think it's fixed? Yeah, it doesn't change. Why it doesn't change? Because remember when you go to the shopping mall, all the shops will open at 9 a.m., right? Close at 5 p.m. So the time slot is fixed. Right? Each day, each shop opens only for 8 hours. So therefore, the total number of electricity expense will only be using for 8 hours. Right? So that's why it's fixed cost. And the next one, cost of videos purchased for sale to customers. Direct, indirect? Direct, right? Because we know exactly how much it cost us for purchasing one video, right, before we sell them to the customers. Fixed or variable? Variable, yeah. Because the more you sell, then the higher cost it will incur for purchasing those videos. Number C, subscription to Video Trends magazine, direct or indirect? Direct. Why is direct? Because, we know the subscription cost, right? So have you subscribed any magazines here? So what you need to do is you pay a certain cost each month, right? And then you will receive the magazine for that amount. And we can also count how many different types of videos are included, are advertised in the magazine. So therefore, if we divide the total subscription cost by the total number of videos that we advertise in the magazine, then we can know, right, exactly the subscription cost assigned to each different type of video. So that's why it's direct. It's fixed or variable? Fixed, right? Because normally, as I said, you pay a fixed amount of subscription cost in front, right? So that will not change once being paid. So it's fixed cost. Number D, leasing of computer software used for financial budgeting at the store. Direct or indirect? Indirect. The software can be used for many purposes, right? So it can be used for, because it says it's used for budgeting. So when we're talking about budgeting, right, we are not only budgeting for the number of products we are selling here, which is the videos, but also, we need a budget for employee salaries, right? So in other words, the cost, right, the computer software the cost of that will be shared by too many activities, right? Similar to the electricity expense we talked about for the car manufacturing company. So in other words, it's very difficult, right, to assign this cost to each individual product. So it's indirect. Variable or fixed? Fixed, right? Leasing fee, leasing cost. Have you leased a car, rent a car, rent a room, right? Once you have finished the negotiation with your landlord, the car leasing company, then that cost is fixed, right? At least for a certain period, right? Insurance policy, similar to the leasing cost, right? Indirect and fixed. Good. So that's the first question. Seems like you have a very good understanding of that. All right, so let's go back to the lecture notes. So, yeah, remember when we are, when the company is making a product, right, more than one type of cost will incur. So therefore, we need to assign cost, right? So when we are talking about direct cost, we normally use the word trace to represent the assignment of this cost to a particular cost object, right? Because we can know exactly how much of them, right, among the total figure that should be assigned to a particular cost object. So that's why we use the trace. Trace means follow exactly, right? And we know exactly. And however, for indirect cost, given that we can't know exactly how much of the cost should be assigned to a particular cost object, we use allocate, right? Allocate means we can't trace, but at least we can have a guess, right? Try our best to assign the cost, right? So cost tracing is always used for direct cost, right? When we are talking about cost assignment, and allocation, right, should be matched with indirect cost when we are talking about cost assignment. So pay attention to that, right? So you can't say we allocate direct cost. Right? You can only say we allocate indirect cost. Right? Similarly, you can't say we trace indirect cost. Right? You can only say we allocate indirect cost. So that's the thing, right? So assigning costs are important for all sorts of different types of firms, right? But in real world, we typically have 3 types of firms. So retail sector companies. Have you heard of this concept before? So what's a retail company? probably don't know what it is, but you know JB Hi-Fi, right? So JB Hi-Fi, what's the business model? They purchase the products from Sony, from Panasonic, right? From Apple, Microsoft, and then they help those companies to resell their products, right? So in other words, retail companies, they don't make their products. They don't make the products by themselves, right? It's just like an agent, right? We sell the products for someone else, right? So this type of firms are called retail firms. And a service sector company, service firms, so that's easier. Service means you don't sell the physical products, right? But you provide the services. Like HR Block, right? It provides individual tax services, right? Provide a tax service, provide a tax return service for their clients. So there's no physical products sold by the company, right? So it's a service type of company. And the consulting firm, another good example of service type of company, right? So they provide consulting services. And the manufacturing firm, right? The easiest one to understand. Manufacturing means making products. Holden, unfortunately, probably I should have changed Holden to another car company because Holden, it does not have a manufacturing plant here anymore in Australia. I think the factory shut down in, 2 years ago, I guess. So all the Holden you bought here in Australia were made in US or Europe, right? Which is a sad thing for Australia. But the key idea is for Holden, right? 2 years ago, they make the car by themselves, and then they also sell those cars. So this type of company is called manufacturing firms. And I think the focus for this course will be on the manufacturing firms because the cost calculation, the cost system used in these firms are more complicated. So it's better to look at this type of firms first. So for manufacturing firms, they always have inventories. Do you still remember inventories? Inventory is one type of item that will appear in which statement? Balanced sheet, right? Because in inventory are one type of assets. So in other words, the company owns those right items, right? And it can use those items to create a value for the company. So that's why they are assets that should be recorded in a balance sheet, right? But for manufacturing firm, there are 3 types of inventories: direct materials, right? Say for example, if the company purchased some material, and as long as they paid for those materials, then the title, the ownership of the material belong to the company, right? Then those materials become the assets of the company, right? So therefore, all the cost of purchasing the materials should be recorded on the materials inventory account, right? So the second type of inventory is called a working process. Maybe this is the concept you first heard, right, during your study. So working process means something that is in the process of being made, right? So again, if we are talking about a airplane, a company manufacturing airplane, right? So it's a bad drawing, but what I want to say is this is the body of the airplane. So that's called a working process, right? Because the airplane cannot, because the jet cannot fly, right? Because we haven't put wings and tails on it, so it's unable to fly. But it's in the process of being made. It's not a raw materials because we have already used the machine to shape or blend the materials into this shape, right? So it has been worked on. It's not a raw material, but working in process inventory account. Right? And the last one is finished goods. So I think finished goods means all the goods has been finished. All the work needed for making that a particular product has been finished, completed. So which means if we add 2 wings and a tail on the airplane, and put all the seats in the airplane, and also the driving room here, and it's finished goods. So the line here is, as long as the particular product is ready for sale, right, has full capacity that it's supposed to be, then it's a finished good. Right? So these are the three types of inventories a manufacturing firm will have. And why we need to understand those inventories? Because as a management accountant, right, we have to estimate the cost for each of them and then put them under the inventory account, although under different types of inventory account, right, and report it to our senior manager. So that's why we need to look at those three different types of inventories. So I think the time is still okay. So I will show you a quick video on a sports car company called Ferrari. So you can try to think about what are the different types of inventory accounts in this video at a different point of time.
But here we are at Ferrari's front door. The factory gates date back to the 1940s when the company made the move from Modena to Maranello. Cameras are typically unwelcome past this point, but not today. Here, technicians wheel the frame of a Ferrari California through the doors of Ferrari's assembly plant. The assembly plant contains 2 assembly lines with V8 production cars on the ground floor and V12 production car assembly upstairs. That's the aluminum frame.
So what do you think of this?
Ferrari.
Sorry, it's too fast. Yeah. So what's this? It's a working process, isn't it? Right? It's no material. The shape you can already start to see the shape of the unfinished product. So therefore, it's when we record it for accounting purpose, it should be part of the inventory account, right? But particularly the working process inventory.
Frame of a Ferrari 458 at the initial stage of the assembly line.
And given that, remember, you can also see that there are some, the workers are working on it, but the company, remember, need to pay for those workers, right? So the cost of the labor for making the car should also be part of the working process inventory account, right? Because labor has been used for the purpose of making finished products, although it hasn't been finished, right? So therefore, the materials that have been, the cost of materials that have been used, right, in making this unfinished product, and also the cost of labor involved here, so they add up together, should be recorded in the working process inventory account, right, at the end of the period.
Assembly line. The overhead transport.
Again, working process, right, all working process.
Transitions from one line to the next. Simultaneously, on the opposite side of the plant, technicians prepare the powertrain assembly for installation.
You can see all the labor costs
like
incurred
here.
here.
The assembled powertrain to the designated place on the
and then you can see also there's a conveying belt or moving machine.
On the assembly line with a train to the designated place on the assembly line. Like this.
Sorry, quick. You see it's moving. There's no labor involved, right? But some machines control this, whatever it is, right, and then make it moving. So how can that be possible? Does the company need electricity expense to make that happen? Yes. So therefore, indirect cost, electricity expense, can also be part of the working process inventory account, right?
Powertrain to the designated place on the assembly line where the
again labor
will lift the powertrain into place underneath the car. With the drivetrain in place, cars are whisked off to the final leg of their journey. From here, the final missing pieces, such as doors, windows, and trim, will be fitted.
Still labor cost. Too slow. Let me make
valves to heads within.
Still working process.
It's a complicated process, and every
Okay, let's move here. Now it's finished goods because it's ready for driving. So hopefully you have a good understanding on different types of inventories at this stage. But anyway, let's go back to the lecture slides. Yeah. So another example, a company making tables. So all these costs are raw material costs, right, which should be recorded in the materials inventory account. And these are the working process, right, because the table only has two legs, right? So two legs cannot make the table stand, right? So in other words, it's not ready for use. So therefore, all the labor, material, and electricity expense should be added together and included in the working process inventory account, right? And the table is finally made, but with 4 legs, right? The other 2 legs on the other side are hidden here, but it should be 4 legs. Otherwise, it's not a finished good, right? So, as I said, in this table making process, what are type of costs incurred? What are the different types of resources the company used for making the table? Material cost, right? They are not free. We have to purchase them. And we need to pay our workers. Labor cost. And you see, the worker is using a machine gun, whatever it is, to work on the table. So in order to use that, we need a batteries, electricity expense, right? Which is the indirect cost or manufacturing overhead. They are different terminologies, but referring to the same thing, right? So in other words, indirect cost and overhead cost, they are the same, right? Just some companies, they prefer using overhead, but other companies, they use the indirect cost. So therefore, these are the three costs that will incur in the manufacturing process. But the key point is, the more important thing is, at the different stages, right, this cost should be recorded on the different inventory accounts, right? But I will discuss that in a second. So we need to know the relationship. We also need to know the relationship between different costs, right? So direct material plus direct labor. So we call this prime cost. So why they are prime cost? Because they are the primary cost incurred in the manufacturing process, right? And if you add direct labor, indirect material, and other cost, right? The sum of them is known as conversion cost, right? How can you memorize that? How can you remember this? Because conversion means, right, all the cost, right, all the efforts we need to make to convert raw materials to finish the products. So that's why we call them, conversion cost. Convert materials to something else. Right? And all the indirect costs added together are known as manufacturing overhead, right? So that's the relationship between different types of costs. So in the exam, you may be given some of the cost, and then you will be required, right, to calculate, the other type of cost. So you have to mobilize the relationship here among different types of costs before you can, figure out the answer, right? So that's different types of cost. But as I said, right, those costs were incurred shouldn't be recorded as expense, right? But they are expenses. Sorry, they are expenses, but they also can be recorded on the inventory accounts, on the assets accounts. Why? Because this cost can help the company create a value, right? Can help the company, the incurrence of this cost can help the company make products and sell those products to create a value. Right? So that's why they are called inventoriable product cost, right? So in other words, as long as the cost incurred for the purpose of making products, then they can be recorded under the inventory account, right? And this is different to period cost. So expense like marketing expense, right, is period cost. Why they are period cost? Because they are not incurred for the purpose of purely making the products, right? So that's why as long as those period costs incurred, we should record them under which statement? Yeah, income statement, right? Because they are not assets. So therefore, they cannot be recorded under the balance sheet. Where's the lights? So I don't think I can control the lights here. Maybe someone can see the buttons near the door or somewhere. I don't think I can control the lights here. Oh, here we go. I got it. but it seems that doesn't work. So, but are you comfortable to see? Can you see the front? It doesn't matter whether you can see me or not, but as long as you can see the screen, that's fine. Okay, sorry for that. Yeah, so that's the difference between product cost and the period cost. So I think the next slide is very important. Because you know the manufacturing process is not a static process, right, but a dynamic process, as you can see from the Ferrari video. So when the production process flows, then we also need to, keep that updated for accounting purpose. So that's where, I think this is very important. So that's, I think this is accounting language of the manufacturing process. So this is the very start of the manufacturing process where the company purchases materials, right? So as long as those materials are purchased but haven't been used for making the products, then we should record these materials under which inventory account? Materials inventory account, right? As long as the materials are used for the purpose of making products, then we should transfer the cost from, the material cost from the materials inventory account to which account? Working in process inventory account. But of course, we also need to consider labor costs and other manufacturing costs, right? Before we can know the final working process inventory figure, right? And once we, reach the third stage where all the production process has finished, where we have got the finished goods, then we have to transfer all the cost from the working process inventory account to finished goods inventory account. Right? As you can see here, at each of the three stages, a different inventory account get involved, right? So in the end, so that's not at the end of the story, because the company always want to sell their products. The final step is always the sale of those products. So when the finished goods are sold, so that's where we can transfer the cost for making those finished goods to which account? Expense account. So I think that's where there's a big transition. Cost transferred from balance sheet to which statement? Income statement. Right? So that only occurs, you can only do that, right, when those products are sold. Right? If there's any finished goods left unsold, we still, they still need to be, the cost of making them still need to be recorded in the finished goods inventory account. Right? So that's the difference. So that's the cost flow, right? Accounting language of the manufacturing process. So that's very important. So in practice, as long as the manufacturing process proceeds, then we need to update our accounting records. Right? So basically, this is how you calculate cost of goods manufactured and cost of goods sold. So basically, in order to know the total cost of goods, total cost invested or incurred in the manufacturing process, we have to add, number one, total direct material cost incurred. Right? Second, number two, total labor cost. And number three, total overhead expense. Remember, these three types of resources, these three types of costs are always needed in the manufacturing process. But sometimes the company, have some materials left at the end of last period, right? So which means the company may not need as many materials as it needs, right, in making a certain number of products for the current period. So that's why if the company has some beginning material left on hand for a certain period, then we should do one more step where we use the beginning material inventory account plus the material newly purchased in that for the same period, right? And then minus any material left unused. So that will give us direct material used purely for that particular period, right? So we only need this calculation when the company has some beginning material left on hand, right? Carried over from previous period. And in practice, it's quite normal that when because I did another research with a manufacturing firm, with a construction company. For them, I think that because the price of the steel keep on fluctuating, but sometimes become very expensive and sometimes become very cheap. So therefore, for the construction company, what they do is, when the price of the steel is very low, then they purchase a large amount, right? They may not necessarily use all those steel, right, for a certain year, right? But given that the price is very low, so you want to purchase as many as possible and reserve them for future uses, right? If all those steel cannot be used up for that particular year, right? So that's why some companies, right, they often have beginning materials inventory, right? So that's one reason why they do that. So do the same thing for working process. So if the company has some incompleted products carried over from previous period, then you should do this step, right? Do this calculation to get the cost of goods manufactured, right? So using the total manufacturing cost incurred for the period plus the beginning working process inventory, and then minus any working process inventory, any incomplete products left at the end of the period, then we can get a cost of goods manufactured. Right? So cost of goods manufactured refers to the total cost, right, incurred in the manufacturing process for the purpose of making finished goods, right, in this period, in a particular period. And once we got a cost of goods manufactured, then we can figure out cost of goods sold. Because remember, although the company made, say for example, 100 products, right, for this year, the company may not be able to sell all of them, right? So that's why if we use the beginning finished goods inventory, if the company has any left from previous period, plus the total number of new products made purely in this period, and then minus any unsold finished goods inventory. So that's what gives us the total cost for making those products that are eventually sold, right, during that period. So that's actually how you calculate the cost of goods sold. Remember, in BUSN 7008, you get this concept, cost of goods sold. And if it's a manufacturing firm, so these are the process, working process, how we get cost of goods sold. But I think in that cost 708, you're only given, right? You're always given cost of goods sold, right? So now you learned how the cost of goods sold comes from, right? So that's this one here. So now let's look at the second lecture problem. Sorry, I have to extend this lecture recording. So second lecture problem. So there are some costs given here, right, in this question. So I think the first question, prepare a schedule of cost of goods manufactured. Actually, I just showed you the formula of how to calculate cost of goods manufactured. Right, and then the second question, prepare the income statements. Yeah. So that's how we do it. Remember the formula? We have to figure out what's the total material used, right, in this period. However, given that the company has some beginning inventory for material, so therefore we need to do a calculation where we use the beginning materials, right, plus the material purchased, right, and then minus ending material, the material left unused at the end of the period. So that will give you 71,000. So that's the direct material used in this period, right? And then next, direct labor cost, 25,000, no problem, right? Labor cost can never be carried forward, right? So if, in other words, labor cost only incurred, right, in each period. So manufacturing overhead, remember they are indirect cost. So go back to the question. We have four types, right? Indirect labor, $15,000. The insurance cost, planned insurance cost, $9,000. Depreciation, right? $11,000. And R plus M cost, $4,000. So therefore, add up these four types of overhead cost. So that will give you $39,000. Right? So that's the total manufacturing cost incurred. So what's the total cost spent in the manufacturing process in this year? And the company, remember, the company has beginning working in process inventory. So therefore, we have to add the beginning working process inventory and minus ending working process inventory. So that's how you get a cost of goods. Cost of goods manufactured, $136,000, right? And then we keep on, so that's the first question. In the second question, we need to prepare income statement where we need the figure for cost of goods sold. How can we calculate cost of goods sold? Maybe using the cost of goods manufactured, right? Because not necessarily all the goods manufactured in a particular period will all be sold. So therefore, we have to, do one more step to figure out cost of goods sold. And this is how you do it. So we use beginning finished goods inventory, which is given, 18,000, plus cost of goods manufactured. Remember, we just calculated cost of goods manufactured, right? And then minus ending finished goods, 23,000. So we can get cost of goods sold. Remember, we still need other costs, right? Because we need to prepare income statement, right? So don't forget other costs. Don't forget other payroll costs, to be more exact. So other cost includes, marketing expense and an administration expense. Remember, they are payroll costs. Why? Because these costs are not related directly to the manufacturing process per se, right? So they are payroll expense, which needs to be in the income statement. So therefore, we use total sales minus cost of goods sold, and then minus all the payroll costs. So that will give us the profit, right, before tax, $47,000, right? So that's this question. So any questions on this? No? If not, then let's go back to the lecture notes. I think 2 more slides before we finish. So yeah, management system design. So we talked about management accounting, cost accounting, right? How to estimate cost. So management accounting system here refers to the way that how we use the system, how we set up the process, the procedure of calculating the cost, and use them, right, in the daily management of the organization. So by designing a management accounting system, there are some costs, right? You need people to do it, right? You need to pay them salaries, right? You have to, get the data, right, before you can use the system. So therefore, it has some cost. But the benefits are, by having established, formalized the system in place, it can help you make the decisions, right? Make the plan more effective, better control manage your staff. So therefore, for most organizations, right, they have a management accounting system, right? A systematic way of using cost accounting information. But a caution should be taken that when a company decides to use a particular system, like the KPI system, right, it needs to consider the behavior issues, as I mentioned before. So how the use of the system will affect, people's behavior. So another example I had with is the bank, where the bank has 34 different branches across a major city. So the problem, I think in 2017, the bank introduced a KPI system, right? And the KPI system is the same for right, for each branch. So initially, the CEO thought it's a good way because, no matter which branch it is, right, you always use the same system, right, which ensure the fairness of the, of the process. But later on, one problem arises where, some people in rural area saying that it's not fair, the system is not fair. Why? Because, the local environment, economic environment is not as good as, in central areas. How come, we use the same KPI, like the sales revenue, right, the loan sales revenue, right, for us, right? Given that the local economy here is not good compared to other branches, right? So this is the fairness issue raised by the people, by the employees in the rural branch, right? So then if the problem was not solved, then some of the employees left the bank, right? Because of the fairness issue, unfairness issue. So the point here, the example shows that they use a particular system, right, that has implications, not only influencing employees' behavior, people's behavior, but also sometimes organization strategic outcomes. Right? So therefore, as managers, as management accountants, whenever we whenever we decide to use a new system, always consider the behavior effects of that on people. So I think that concludes the lecture. Okay. Any other questions before we finish? If not,